Hello and welcome to the Unique CPA with your host, Randy Crabtree. The goal of our show is to keep you at the forefront of the changing face of public accounting by having conversations with fascinating leaders and bringing you their stories, insights, and advice. The Unique CPA podcast is brought to you by Trimerit, the specialty tax professionals.
Today, our guest is John Briggs. John is founder and CEO of Incitetax out of Utah, although we don't want to pigeonhole him into Utah because I know they work with clients around the country, but that's just where he is located. And John has a kind of a unique spin on building and running the accounting practice. And so we'll talk about that today. But before we do that, John, welcome to the Unique CPA.
Randy, thanks for having me.
Yeah. So without getting into this unique practice and everything, why don't you give us I gave you like a 10-second intro. You want to give us a little more than that, or we can jump into it, wherever you want to go.
Sure. We have a team here now of about 50 team members. And I'm one of those products of I had to create my business in order to put food on my table. And I was stuck in a bad situation with a traditional firm. And it was a lot of nepotism, family owned.
I've been through that. Yep.
Family promoted. And because of all the family they hired, they couldn't afford to pay those of us who were doing all the work, who were not family. So
that's not a good situation.
No, it wasn't super great. And I didn't even realize at the time, but apparently had become pretty grumpy. And I remember the day I came home and I told my wife, I said, I think I just have to leave that firm. Like, I don't want to be disloyal to them, but I think I could be better off doing this on my own. And she basically was like, well, it's about freaking time that you realize that.
All right. So she knew before you did, I guess.
Yeah.
All right. And so that's when you started the Incitetax then, is after that experience. And so Incite, that I think I read that was 13 years ago. Is that correct? You started Incitetax?
That's right. Mm-hmm.
And so let's jump into it because I want to talk about a few things today. One, you have some unique or actually key philosophies you follow in business as well. But in general, let's talk about the model that you use for Incite. So I might have this wrong, correct me, but you have Incite that you are managing, I assume.
Uh-huh.
But then you have what did you call it? Not a subscription model, but you have what kind of model you're using?
The licensees.
Licensing. So are you licensing the name Incite to others or your knowledge and experience?
Both.
Okay. So why don't you fill us in on that? What is this licensing model you're using?
So the way we're structured, we obviously have W-2 team members, and we have anywhere from intern level to first years to experienced. We have that whole scale of W-2 team members. But the ultimate position for the accountant within our firm is this licensee position. Once we feel like they're able to handle the client relationship, stay organized without dropping the ball, and they know enough knowledge so they can sign on the tax returns, we give them this opportunity where we actually create a separate entity that Incitetax owns part of and the accountant owns part of. And so now they become independent contractors. It's their own business, and it's that relationship. So they set their own schedule. They determine the type of work they want to do. And then what we do at Incitetax is they use our brand, and then we have all the backend systems so that we really kind of say it in a way of enjoy the benefits of being a business owner without the headaches. Because on our backend, our part in the relationship is that we handle kind of the annoying business side that a lot of tax people realize exists when they start their own practice.
Mm-hmm.
So that's kind of the overview of how it works.
So, and I just want to get this straight in my mind. So Incite, do you have a firm that personally that does tax and accounting? You do. And then you hire in people that then have an opportunity once they get comfortable with the processes and the clients and the procedures and the technology and the knowledge base and all this, they can carve out their portion of the Incite that they've been working on with you and just kind of start running their own practice.
That's right. They become owners in their own book of business that we help them grow. because they start with basically no clients. And then with our marketing team, and we have a sales guy who closes the clients, they do all that work. And so the accountant will just have a new client show up on their schedule. And then their job is to confirm that the salesperson signed them up for the right services and start, just wowing the client from that regard. I will add though, we do add licensees directly. So sometimes we find solopreneurs or people with like one or two team members. And we have an application process, obviously, but we will bring people on directly into that position.
Okay, so they can basically use your backend support to help them run their business that already exists out there.
Yeah.
Okay, and so how many of these licensees are there out there now?
So we currently have 5,
Nice.
and we have 3 new ones starting next year. And we are currently working through, we have a solopreneur that has recently applied. So we're working through his application process.
And then the setup then is this ownership is, Incite owns now part of it. The independent contractor now owns part of it. Is there a management fee to Incite, or how's that relationship work?
Yeah. So the compensation is based on it's a percentage of collections. And so that percentage, it's kind of tier based. So like, for example, the first 200,000 they collect, they get 50% of that. And then it goes from 50 to 55, all the way up to 90% that they can make off of their book. I set it up in that way because we obviously, as a firm managing the back end, have costs. But there does reach a point where we've effectively hit all the fixed costs, and we just use that last 10% for the minor variable expenses that might happen.
Mm-hmm.
And that way, their growth, we basically pass on the benefit of being a business owner. It's like, oh, now that all my fixed costs are covered, I basically get to keep almost every new dollar that I bring in past a certain point.
And that helps them risk-wise too. They're not investing in things that they don't know if they're going to need in the future because you've already got them. And that brings up a question then. What about tax software? Is this one licensed software that everybody uses, or is each Incite office licensing their own software? How's that work?
Yeah, so right now we're using the one firm software. We pay for the users. But yeah, we handle all that as part of what we as a firm cover with the percentage we take.
Okay, so they're not paying that. So their cost out of pocket, the licensees, is, well, how about rent? I mean, they rent in their own spot, I am guessing, right?
Most of our licensees are remote.
Okay.
If they want a space here in our office, then yes, they would pay for that office.
Okay, so that would not be in the 50%,
Right.
trickling down to 10% at some point in time. Okay, so they do that. So most of their costs are covered then.
Yeah.
You're selling for them. Tell me how that works, because you said you have a sales team,
Yep.
or at least a salesperson. So you're the one generating business. And one, how are you doing that? And then 2, how do you decide who gets this new business?
Yeah. We've created what I would call a lot of digital real estate. And so we try to have articles and blog posts and lead magnets that are out there that is what people are searching for. And so that does give us a nice amount of organic leads every year. And then, so number wise, we're probably about 1,500 leads that we receive a year. 30% of those are client referrals. The other 70% are from this organic aspect of people Googling for it. Or I do a lot of podcasts. I have a book written for gym owners related to cash flow management. We get leads that way as well. And of course, just good relationships with referral partners. So we get the leads in, and when they get in, our salesperson, not the accountant, the salesperson meets with them, finds out what their problems are, what they're looking for. He signs them up. And anyway, so yeah, it works out really great because then they just show up on the accountant's schedule. And I'll tell you this too, because when I first started, we had the accountants taking the leads because when I was owning the business and working in every aspect of it myself, that's what I did. And that's how I created the relationship with them, right? And with the accounting, the firm name is nice, but the relationship was with the professional.
Mm-hmm.
And so we always wanted that to be as strong as possible. So I was really hesitant for years. Like, no, I don't know if they're going to be able to create as good of a relationship if they're not the ones who sell them on it.
Yeah.
Well, everyone's a bleeding heart, right? Like, oh, I'm going to work with them and I can see their situation. I'm going to discount our fees a little bit. And that discounting their fees a little bit happened like 80% of the time.
Oh yeah.
That doesn't happen with a salesperson. So we get to charge our fair rates. It shows the value the professional is offering. The professional not put in a situation where they feel like they have to discount anything. So it's worked out really well. You might have asked another question, but that answers how we do the marketing. And
then how do you determine which licensee it goes to?
It's a combo of them telling us how much they want in new business.
Okay.
And then having basically like a round robin list. We just try to be fair for all the licensees who are taking new clients. We rotate, but then as their book gets fuller, so we have three of the licensees who don't want new business at all. They're like, I'm full, I'm good. And then if they end up losing someone, they'll just say, hey, I'll take one more. And so we'll put them in, give them the one more, and then we'll rotate them out and just keep those who want the new clients rotating in.
All right. So you said you had three that are full up right now and not taking any more, but have the opportunity, which is great. I mean, if you lose a client or you get rid of a client, probably even more importantly, sometimes, a lot of times.
Yep.
But hopefully with the sales process, you weed out the C and D clients a little bit before you even get to them on board. Is that something you try to do, I'm guessing?
Yeah, we try to weed out the C and D clients. Occasionally they slip through the cracks. And sometimes you have someone who's willing to pay the rates, but they're still C and D clients. And those behavioral things are a little bit harder to track. I mean, there's only so much babysitting we can do for our clients.
Right.
And we do a lot. We try as hard as we can. But ultimately, if you're not getting your stuff, getting us the information for us to even do the work you're paying for, we're basically we tell you, like, when you're ready, let us know, but we're going to stop harassing you.
Right. I have somebody that I'm on I think we're on the tax council together. And she says what she does is with her C&D clients or people that are in that situation, they're just not getting the data. She invites them to be successful elsewhere. So nice. I think that's the terminology she uses, which I agree. And I think she actually will, and I'm guessing, potentially you do as well, will help them find the next place too. So, all right. So let's talk about billing then. I want to go a few different things, but you are not discounting the prices because the salesperson is doing it. From a billing standpoint, though, are you setting up 3-tier prices? Do you have fixed fees? Do you have subscription pricing? Do you have time? I mean, what methods are you using, or all of the above?
Yeah. In general, it's flat pricing. It's kind of like we have an idea of here's the base dollar amount. And then based on complexity or number of returns or, the services they want, we'll increase that fee. So right now it on some level could be considered pretty customized per client. But I think if you look at it on the surface, it's 90% are following into the basic structure, and then 10% have some things that are outside, a little bit more work and things like that.
So I'm assuming you define the scope of everything with each client. And is that pretty much standard then? Is that 90% falls in, or it's just 90% we define a scope individually each time?
No, I think 90% are probably following into our base level.
Yep.
And it is just definitely defined in the agreement, which we've had to reference occasionally when clients are like, well, I don't understand why you would say I need to pay extra for this. Well, as you can see in the agreement you signed that we talked about.
Yep.
Yeah, because obviously, accountants, we can really let scope creep happen without any thought, because the clients are just going to keep asking, and we are the ones who have to stand our ground. We can't expect the client to really know what's allowed and not allowed.
Yeah, I'm pretty fortunate. I get to go out and I have a presentation on, well, I call it mental health, but it's, stress, it's burnout, it's, God forbid, mental illness, but all equating to the profession. And part of the thing I say there is, as CPAs, as tax professionals, as accountants, we just always want to help everybody. And we have this mindset. I don't know what it is. It's just ingrained in it. It must come with the knowledge that we have. We want to help everybody. So someone asked a simple question and we think it's a simple answer. We don't think that we should be billing extra for that. A simple question can be, or a simple not even a question. You could be doing a tax return and you could see that very simple in our minds. Someone put 10,000 in their 401k and they're whatever 50 plus, and they could have put whatever the numbers are now, 27,500 maybe this past year, and you indicate that to them, and then they go and do next year, and now they just save $5,000 on next year's taxes. That was a simple thing. There's a huge value to what we just gave to them, and we just gave that away for nothing. I get worked up on that because we undervalue ourselves way too much, and hopefully part of what you're doing with setting those expectations up front is you are valuing the service that you're giving.
We are certainly trying, and it doesn't mean we don't remind our team every week, like, stop answering emails for free.
Yep, for sure. Now, but if we do have a fixed fee, how do you get out of that? I mean, because we're setting a fixed fee, and so if we're answering these emails for free, do we have to then go to the contract and say, hey, this is out of the scope of what we signed up with?
So it almost kind of the insurance idea. We've figured on average, a client asks X amount of questions per year. And so we include in the fixed price our assumption that they will ask their average questions, knowing that some are going to ask a little bit more, some don't ask anything at all. So we do build that value into the price already, but we limit it to email questions. If they want to have a phone call, we explain to them, like, look, the phone call is a meeting. And you can either ask the question in email, or if you really want, we're happy to have the extra meeting. Some of them, based on their package, maybe only have one meeting a year. And so if they want additional ones, then we invoice them. And we let them know before we do the work, obviously.
Okay. And then let's talk about the licensees in general then, because they can decide where they're going to stop and how much business they want. But do we have like an average of, this amount of revenue, this amount of net profit at the licensee level? And obviously they can control that by saying, yes, give me more, or no, give me less.
Yes. I mean, I'll start with we have one who's basically part-time. She doesn't even work full-time. Her book of business is in the high twos, not quite to 300,000 yet in collections. And then the other ones are all full-time, and their average is anywhere from 500 to 700,000 of collections. And so their take home, like even the part-time person, she'll take home 160, 170,000.
Okay.
And the other ones are anywhere from 250 to like 380.
Okay. That's nice. And you're doing the pain in the butt stuff behind the scenes with all the business development and processes. I'm assuming we have standard processes in place. How about onboarding? Do you guys do
we're not a perfect company, but
No.
yes, we are trying for sure to have standardization across the board.
Right. Now I'm building you up high. I'm going perfect here. Hey, so let's compare this, because do you know if this model exists or did you create it?
So I was introduced to a similar idea when I worked at a traditional firm.
Okay.
I was on my own at the time, and then no one had told me, but passing the CPA exam isn't the only requirement. And then I was filling out the application. I'm like, what is this 2,000 hours? What? I'm like, you're kidding me. And so I needed to join another firm so I could get someone to supervise my 2,000 hours. So I joined this firm, but because I was already established, I was my own business, they had thought, well, this is something we could try. And their model was super greedy, and they didn't provide any support. And so it was good for me to work through that, because then I could see, there's a lot of value here that people like me would like, but there's a couple big holes that are really big turnoffs that I think I can fix.
Okay.
And so we've since tweaked it, and we currently, the very first person I had in this model, we have since separated. It was very lucrative for him, not for us. And so when I realized, I'm like, we need to basically change this, or you kind of just need to buy me out of your book of business. He wanted to buy me out of the book of business. So,
all right. Well, at least you just didn't let it keep going and riding into the sunset with a losing proposition. So
no, and that's one of the beauties of the licensee model. We've had, so him and one other kind of established licensee, where the contract shows, like, if it doesn't work out, it's fine. We're agreeing from day one, this is how we would separate. so that it doesn't have to be, doesn't need to be any animosity involved. Like, you really want to do your own thing, that's fine. Like, here's how we separate, and let's both go on our separate ways, and we'll stay cordial and professional.
All right. So you have the, why is my mind blank? What's the prenuptial agreement all set? So you figure it out.
Yeah.
All right. Got it. So I do know of, and I may have this wrong, I do know of like a franchise model. Isn't Padgett like a franchise model? Are you familiar with Padgett?
I've met Scott. He talked about it a little bit. He said it was similar, but he was asking me the questions on his podcast.
Okay.
So I'm not familiar with
that's
his
right.
model.
I forgot. Scott Scarano introduced you to me. And so, in fact, I was just texting with Scott right before we got on. I didn't even tell him that you and I were talking today. So I should have told him. Okay, so that's how I know Padgett is through Scott. And then the other one, and I don't know much about it, but what does Dark Horse do? Do you know anything about their model?
Other than seeing, I think name might be Chase on LinkedIn.
Yes, that's the name.
I'm not super familiar with his model either.
Okay, well, I'll have to look at that. In fact, I was thinking again. All right, so I'm going to go with this. You created this model. It's a very unique model. You do say on your website or on your LinkedIn somewhere that the traditional CPA firm is broken. I think you use the word sucks. I'm going to say broken. I don't disagree with that. That's talked about a lot on here is the partnership model. Should that not be used? Should we do it something else? Should we do an ESOP? Should we just be a CEO and people working for the firm? What's your opinion why the traditional model is broken?
It doesn't treat the people who are doing most of the work like human beings.
Okay.
And I think ultimately any element of dehumanizing somebody will always lead to something really bad. And what we have going on in the industry, we can even see this trend now, especially after COVID happened. The attrition rate of accountants leaving the industry is exactly the same. 3 to 5 years, within 3 to 5 years, 60% leave. But we also can now see a massive decline in enrollment for new students wanting to have an accounting degree.
Yep.
Because of social media, the big four, for example, which is really what all these traditional firms are just copying. Like, oh, if it works for them, like, you guys, they're billion-dollar companies with a massive footprint, with hundreds of services you don't even know that they're offering. But you're going to copy their model, which of itself is bad, but then you're going to copy it as a small business person. So you can't hide. People are commenting like, oh man, it's really hard working here. They really, hold you to the hours and, minimum 55. So minimum 55, which means if I want to keep my job, I got to hit 55 just to keep my job, not let alone being promoted. So yeah, if you want to be promoted and move in a career path in those big four, like, you're putting in 70 hours a week and it's fine. I'll put in my 10 to 15 years and I'll become partner. Guess what? When you become partner, your hours are still there.
Yeah, it's crazy.
So it's not sustainable. And we see that because 60% are leaving within 3 to 5 years. And my bold idea, and maybe bold is not the right word, but I believe if we don't fix this as an industry, our economy is going to suffer, because our economy in the US, 95% is small business. Well, small business are the ones who need accountants more than anything. And as we continue with this thing, especially with inflation going on with wages with accountants, at some point, the firm has to raise their prices to be able to afford the people that are going to help them do the work, which means then we're at some point going to price ourselves out of small business owners being able to use us, which means some other sort of solution has to come to the marketplace that isn't going to be by someone as skilled as the accountant.
Right.
And, we all know that our small business clients need us, because you talk to them and you're like, how do you not know these things? Well, because they didn't go to school to become an accountant. They have passion about their business, not being an accountant. And so if we continue with this trend, I fear. So that's why I'm trying to come up with these models and let people know about it so that we can keep accountants in the industry.
Yep, I like that. And I can see that. I never thought about it to that level before. But I've always thought, okay, if everybody's dropping their C&D clients, who's picking them up? And at some point in time, there's nobody to pick them up. Not that you want the C&D client, but that to keep the economy going strong, somebody has to be helping all these businesses. And if there's no one to do it, I can definitely see that. I like your insights to that. See, that's what the show does. We bring your insights to the audience. So thank you. I appreciate that. There has to be changes. And I talk about this in my mental health presentation, is that we have to figure out a way to, one, change the perception of the industry, which is somewhat there because of the big four you're saying. So there's a perception, but there's reality too.
Yeah.
Because the reality is there. But I think it's a combination of both. I think it's a combination. I don't want to go into accounting because they work too hard. Well, yes, they do. And there is too many hours normally in general. But some of that is perception, because I know plenty of firms now that have, instead of doing you have to work a minimum 55 hours. I know a firm that's installing this tax season, maximum 45 hours. And I think that's not the norm, but I think it'll become more the norm going forward. How about you guys with hours? I mean, one, do you even track hours? Because you're probably not billing by the hour, I'm guessing. But two, do you have a limitation on number of hours you can work?
Yeah, so lots of thoughts there.
Yes,
First of
that was a
all,
long question.
yes, we track hours because you have to be able to run your own metrics to know how profitable a customer is.
Yes.
Right. So we do track our hours. Industry standard, like Big Four, usually base their salary off of 2,800 hours worked in a year.
I'm not doing it.
Crazy, right? We base our salary off of 2,080, which is the 40 hours a week calculation. Yep. And so then what we do, so we give company holidays and PTO. Everyone gets the same company holidays. PTO is based on tenure. In addition to that, though, if they do work more than 40 hours in a week, that time is put into their PTO bucket.
Okay.
So that by the end of the year, they would have been able to take off as much time as they worked overtime. Therefore, we stay as close to that 2,080 hours for every W-2 team member as possible, because we don't necessarily have the licensees track their time because they are their own business. We give them access to the time tracking and we encourage them to understand the profitability of their customers, but it is up to them ultimately. And I have some who probably do work about 50 hours a week during tax season. And those same ones also take off like 4 months outside of tax season. They're balancing themselves out in a way that works for them. Our team, we averaged 42.6 hours a week last year during tax season.
Okay.
And we do that PTO thing I was just describing. If they hit 55, we do not give them any more additional hours. So we give them no incentive to work more than 15 overtime hours in a week. But again, we want to be closer to 40 and we were at 42 last year.
All right. Well, that's good. So the 45 I just said, you guys even beat that.
We're trying. Nice. But I love that though, because that's the step in the right direction, right? I mean, you have that. And then sometimes I'll talk to business owners like, oh yeah, my team doesn't work more than 40. Oh, interesting. How many hours do you work? Oh, yes. 90.
Yeah.
Okay. I wonder if they may be willing to work a few extra hours a week so that maybe you only have to work 70. Like let's try to work everyone towards 40, not just your team. Like you have to also take care of yourself.
And that's the thing. It's so often people don't think that. It's like, well, I'm going to help everybody. Like we were saying before, I'm going to help everybody. And if it's my employees I'm helping, well, I'm going to take that burden on. No, it's important. You got to take care of yourself. You're going to be a much better leader if you're refreshed and rejuvenated and working whatever it is. If it's 55 hours, whatever, than if you put the 70 hours in. And then the other thing is that you're modeling behavior that people think they need to live up to then too. So even if they're not, they see that, to get ahead, this is what I have to do. I have to put 70 hours, which I think then goes back to this whole, we're going to lose people and then we're not going to be able to sustain our industry.
Yeah.
All right. So let's talk about that a little bit, because I know you have a lot of passion on a lot of topics, and we just talked about that overworking. And so part of why I'm sure you're doing it is to, we already know, attract people, keep people. But what's your thoughts on stress / burnout / mental health issues in our industry? I assume that's part of what you're trying to address.
Yeah. I mean, there's so much data out there that shows if you're overworked, feel like you're overworked, that stress then makes that other part of your mind weaker, which then can lead you to, if someone has a genetic disposition for mental health issues, you've made it worse. And if you don't, you're still adding into this scenario where you are putting yourself in a situation where mental health issues are the natural byproduct of the bad model.
Mm-hmm.
And so just the world's a better place if everyone is able to overcome those. I mean, there's so much heartache that goes with it. We refer to it as deep and dark times because rightly so. It comes with it a very heavy emotion. And so, yeah, absolutely. We're hoping that we can keep people mentally healthy because guess what? That whole work-life balance thing that people talk about, I mean, I saw a TEDx talk on this and he did some demonstrations, but ultimately the gist is you can't separate it. If work is stressing you out, that carries over to your personal life. If you have stress going on in your personal life, that carries over to how you show up at work and how you handle customers and all that stuff. Like they're inseparably connected,
Mm-hmm.
and therefore you can't balance something if it's one thing. To balance requires at least two items. And so I think people are becoming more aware of, wow, this stress is actually negatively affecting every aspect of my life. Let's just, let's raise the tide for all the boats.
Yep.
Let's allow us to all be happier in every aspect of our life.
And I think that leads into somebody that I seem to mention on every single one of these podcasts, but John Garrett. Are you familiar with John Garrett? What's your and?
Oh,
You should go look at it. John Garrett, it talks about, and everybody that's listened to this podcast before probably has heard me talk about John a lot. But John wrote this book called What's Your And? John's a CPA, but I don't know if he calls himself recovering CPA, but he's not in practice anymore. He's more out just talking about his goal of allowing everybody to bring their outside of work passions into work. You aren't the accountant, you aren't the auditor, you're the mountain biker, you're the hiker, you're the craft beer enthusiast, you're this, and this is your passion outside of the work. And if you can share your passions inside of work, overall, everything's better. So that alone is going to help with stress levels and burnout and everything if you could be yourself at work. So I think you would love
I love that.
John's message.
Yeah.
When we're done here, I'll send you a link to his book and everything, but it's great. He's a great guy and very fortunate to know him. All right. So I'm going to segue here, probably not a great segue, but I'm going to segue into, we talked about your Incite or your salesperson you have already. And I'm going to ask one other question before that then, because it sounds like you have a pretty decent overall marketing plan or program in place. Is this one individual or is there someone else that's also part of marketing?
Yeah. So we have 4 team members on our marketing team.
Okay.
And they help with content creation and distribution of that content. And we currently have 1 salesperson.
Okay.
If our leads ever increased more, we obviously would just add more sales reps, but half-hour phone calls. And doesn't have to do a whole lot of like finding leads himself because we have the database, they're coming to him.
Right.
I mean, he could ultimately handle 16 calls a day. It wouldn't be a very fun day, but theoretically he has the capacity to do that. And so until he's taken, 50 calls in a week, we just need the one right now.
So does your salesperson then have incentives on bringing in business, or is it straight salary? Is there commission, or how's that work?
He gets a small base and then he gets a commission on people closed. He gets a commission on the first 12 months of collections.
Okay. All right. Nice. And then from a marketing standpoint, I know you have a few slogans out there. I see you're wearing one on a shirt today. It says, "We'll give tax advice for tacos." I assume that your marketing department came up with that?
We do like creating our own shirts to kind of show that we are a little bit anti-traditional and more laid back than maybe a typical firm.
And here it comes. I'm going to have to ask you, and I mentioned this to you before. I'm not sure I'm a huge fan of this slogan. I'm sure it brings in business, but I've seen you all wearing shirts in the past saying IRS sucks.
That's right.
And that's a marketing department item there?
I mean, that was more my brainchild because it's a marketing message that sticks. Yeah, we don't think very highly of them based on our interactions with them.
I give them the benefit of the doubt. I understand. I think one, who's going to go work there? I mean, why wouldn't you? I wouldn't want to work at the IRS. And they have some great people for sure, but they're also hamstrung with, what the Congress gives them. And I mean, their systems are out of date. They have a lot, but I'm not defending them. But you live by the motto, IRS sucks, huh?
We do. Because ultimately our interactions with them, we don't feel like behaviorally that the IRS agents we've had to deal with honor the IRS stated mission, and ultimately kind of feels like they're out to get you as opposed to really approaching it with integrity and fairness.
Okay.
And so that's, yeah, I'm not, as human beings, I'm sure they're great people, but our interaction with them, defending our clients, has usually been a scenario where we've had to explain tax law to them. We usually have to get their supervisors involved
Yep.
to show them what the IRS has said about some of these things in the past, because they didn't want to take the time to do that. They were happy trying to assess the additional tax without doing the work.
Okay. And I don't disagree with that we often have to educate on the correct way. And I'm sure part of it is like they're not trying to figure out the tax law to minimize your client's taxes, but that's what you guys are doing. So when you're doing that, but yeah, we've done a lot of employee retention credit the last couple of years, and that's been a pretty big issue dealing with them on that, to the standpoint where we just got notified from them in a conversation last week that they are not going to give out any more information on when the ERC claims are going to be processed. If we call them now, they're just going to say, yes, we're looking at it, and check back in 30 days. So, but I understand on their end, it's got to be frustrating with the ERC too. There's so much misinformation and bad claims being put on that they're probably getting frustrated as well.
Yeah.
Because I'm frustrated. All right. So before we wrap up, and this has been fun, even with the IRS sucks logo, it's still been fun. So I can't help. I have to give you a hard time.
I know.
But before we close out everything, I'm going to give you a chance to wrap up. But I want to ask you one question, and this is a question I asked everybody even before I knew John Garrett. When you're not working, when you're keeping your hours to a minimum and you got things to do outside of work, what are your passions? What are your fun things? What's your and? John Garrett, I just stole your, don't sue me. What is your and? What is your outside of work fun?
My preference would be to get lost in a good fantasy book.
Yeah.
I don't know if you're familiar with Brandon Sanderson, but I think he's one of the most prolific fiction authors out there.
Okay.
Really good stuff. I love getting wrapped up in a good story. And then, I have kids, and I'm one of those guys that I'm just honest about it. Sometimes they just drive me insane. And so when my wife proposes a family trip, my initial reaction is like, I really don't want to do that. But thankfully, my wife ignores me being a grumpy old man. And, family trips are really fun.
Yes.
And so that's probably between family trips and reading, getting caught in a really nice story. That's what I like to do. All
right. And then before I ask you to give your contact information out, any final thoughts you want to throw in here?
No, I appreciate you having me on. We have a really unique model, and we've done it long enough now that we've been able to tweak a lot of the things. So it's a really good, fair relationship for both parties. And I hope if other accounting practice owners are listening to this, that maybe there's some sort of idea, even if they don't want to go the full route of licensing contracts and things like that, that hopefully there's something there where all of us can move towards being a profitable business while still not needing to work crazy hours for our team or ourselves, because ultimately I truly believe the economy needs us. And if we're working too many hours, we're just putting ourselves at risk to hit that wall of burnout at some point.
I agree completely. I think that's great advice. And then if somebody wants to find out more about you or Incite or the licensing model or how bad the IRS sucks or anything else, how do they get a hold of you?
Yeah, they can just email me directly, John, JOHN, at incitetax.com. And that is INCITETAX. It is a purposeful, aggressive word.
I knew that.
It does mean to cause to action, but because that's what we want our clients to do is actually take proactive action. But yeah, John at incitetax.com.
All right. Well, thank you, John. And I think being an innovator, being a trailblazer of a new method or a new way of going to business and staying in this business and the hours and everything, I think that's great. I really appreciate you sharing your information today, and hopefully you continue down this road and make some changes in our profession.
Thanks, Randy.
Thank you for joining us today on the Unique CPA. You can find all the links and show notes for today's episode, as well as more about TriMerit, at theuniquecpa.com. Remember to subscribe and join us for our next episode, where we'll be going beyond compliance into forging new pathways of delivering value to your clients, diversifying your revenue streams, and leading-edge management techniques and styles.